All right, so let's start. So I was saying that this can be a 4 hours time frame trend, a bullish trend. Okay, why this blue retracement? I've explained retracement before. This retracement now can be like this. All right, this retracement can be like this. Now, what do you do when you are trading a higher time frame bullish trend? So let's say because of this skeletal view now, we can say if we open it in 1 hour, let's say, or 30 minutes, the 4 hours trend will be like this. Okay, let's say something like this. This is an uptrend. Okay, maybe this is the 30-minute view, and then we'll have something like this, and then maybe something like this. Okay, so this is the retracement before we get to the 4 hours POI, and then boom, up again. Okay, so this can be the skeletal view. This can be the skeletal view of this. Okay, this can be the skeletal view of this one. This will be 4 hours time frame. This will be like maybe 30 minutes or something. Okay, now what do you do when you are seeing a trend like this? You want to sell. Make sure that as you are selling, you are not targeting any low. All right, make sure you are targeting above this low, this higher time frame low. All right, because you're in an uptrend. Ideally, you're not even supposed to be selling. You're supposed to be buying. So let's say you catch a sell. You cannot just catch a sell and then you'll be expecting to break a low, because first you are in an uptrend. In an uptrend, always expect that lows will be protected. Okay, so let's say you caught this small sell. You caught this small sell from here and you want it to come all the way down. Doesn't work like that. So in your lower time frame, you can mark this point. You can mark this point as your here as your higher low. As your lower high. Here as your lower high. Here as your lower high. Here as your lower low, lower low, lower low. In a lower time frame. Why when you change it to a higher time frame, you know you are dealing with higher time frame. All these skeletal views are not showing. So it will not be like this. Your low, your higher low, your I don't know if you guys understand what I'm saying. So just like for example now, let me just go for an example. Let me remove all these things that we did last class so that we can see it well. This is 1 hour time frame, right? Now look at this. I showed you guys this one last time. Okay, this is a bearish trend, all right? Why? Because when we took out the second demand zone, okay, then price started selling and that. But in 4 hours, you will not really see it like this. You will see it like this. That is an uptrend. We know that this is an uptrend, right? We know that this is an uptrend. But this retracement that we're looking for, don't target any low. Don't come and be saying because price is selling. You want to come and be targeting here. You want to come and be putting your TP here because price is selling. You are in an uptrend. So you cannot expect that every low will be taken. Okay? So how do you manage yourself? If price is ranging like this, just count after the second break or the third break, close your sell. If you are selling in an uptrend and price is ranging like this, it's just like this gold now. For example, look at this. Let me show you guys something. This is 4 hours view, okay? But when you look at 30 minutes now, see, can you see the skeletal view of this trend? Price is selling. We are in overall bullish trend. You see it. We are in overall bullish trend in 4 hours. Okay, why is network misbehaving now? Okay, see, look at this. Now, price came to this buy point of interest. Listen, but in lower time frame, you will see that structure in lower time frame still obeyed this zone. Look at it. Price was ranging, retracing, come down, retrace, come down, retrace, come down. You see it? So this buy was not a mistake. It was not a mistake. You can see that after price range there, tapped into this um, breaker. I'm using some terms that a lot of people that are new will not understand. That's what I'm avoiding. Okay, price broke this support. All right. Listen, price broke this support, this horizontal support, and then change it to resistance. Okay. So after changing to resistance, what happened? Price broke this low. Look at it. Price broke this low, right? One. Price retraced again. Start breaking the low. New day open. Retraced, broke another low. Two. Then price came again, broke another low. Three. After this third one, you don't have any business with holding your sell. Whether it has gone into your TP or whatever. Close the sell because this is a lower time frame trend that you are dealing with. The trend is bullish. You can't expect that price will just continue selling and selling until the POY changes, until the trend changes in higher time frame. Okay, this is a lower time frame. After this third break, close the sell. I know I didn't tell you guys this last class. Close the sell because this is a lower time frame retracement. In higher time frame, it is waiting for the fair value gap that is here. I will explain fair value gap in our next class. That's our next topic. Okay, it is this is the mistake that many people are making. All right, it's the mistake that many people are making. By the time you are in a sell and price is breaking structure, range break structure, range retrace break structure, retrace break structure. You should know that there's something that is going on in the higher time frame. Except the higher time frame is a bearish trend too. Look at this range retrace break structure, retrace break structure. Could not even come and take this low, and there are people that will be targeting this low. It is an uptrend. You can't expect price to just be breaking low in uptrend. All right. So when price is doing like this, make sure you close your trade. At least if you want to hold your trade, at most after the third break, exit that market. Exit that market. So this lower time frame structure will help you to manage your trade. In this time frame, this is a bearish retracement. Look at it. Higher high, higher low. I mean, lower low, lower high, lower low, lower high, lower low, lower high. You've broken towards zero. Just leave it. And whatever profit you see, just leave the market there. Because in higher time frame, we are bullish. All right. If market really want to sell, market will not be doing. That's what I always tell my mentees. If market really want to buy, if gold really want to buy, it will not be doing a small retracement break, small retracement break. No. If it really wants to sell, it will not do that either. It will sell aggressively before it even form any retracement. Not the one that will retrace long. I've answered that question enough. Let me go to the next one, please. I believe principles you understand better now. So Finn, I've answered your question. How can you ask me how many candles is needed to form a valid retracement? Sorry, Finn, I don't know. I don't have an answer for you. You said your valid high is very. Finn, yeah, this question. He said my valid. The question is, you said your valid highs, bearish trend, and lows bullish trend must engineer liquidity. I need more clarity. Don't worry, when we get to engineer liquidity, you will understand better. I'm just saying that personally for me, as somebody that trade structure, liquidity, and entry, before price, let's say for example, Finn, I'm answering your question right now. Normally, this is uptrend. So what I'm saying is that before price breaks this high, so this is what I'm saying. So this is our high, right? Until price engineers liquidity or create inducements, I don't have a high yet. Okay, when you engineer liquidity like this, then I can now say, okay, this break is a valid break of structure. That is personally how I do my own. I don't know about, of course, everybody have what's working for them. So until there's inducement or there's engineer liquidity, I don't have a. So there must be that manipulation first before a high is taken. That's what I'm trying to say. The structure marking that include the market structure shift. Do a structure marking that includes a market structure shift? I don't understand that question, sorry. Mass ZFX. How can we add support and resistance, trend line break and retest pattern trading and this structure narrative to make a decision? Because I've backtested since the last class. We are not all are not and I don't know if it's time to answer this question. Okay, Mass ZFX. Support and resistance is a different ball game. That's why some people trade support and resistance, some people trade um, breakout and retest. Okay, but what I will tell you is that structure most times will always follow support and resistance, just like here. Okay, so you can see that somebody that is waiting for support can trade here, can trade here. Okay, this is an uptrend. Look at this now. Even after we got to that retracement point, if we stretch this, you see it, we'll still be able to, the support and resistance trader will still be able to say, okay, the retracement is coming to the support and that and that. So if you are trading a structure, most times it will always follow support and resistance. One of my mentees always use that pattern, rising wedge and falling wedge. Okay. For example, now the way this trend is now, I just draw it like this. Alright. So you can see that it's aligned and the resistance. So in patterns, this is rising wedge, right? This is rising wedge. And then now this rising wedge, look at how structure now play now. This is pattern. So after we retested, okay, you took your entry. But what's going on here now? This is the same thing I was telling you guys about. Price retested, right? It started breaking structure. If market really want to sell, market will not be doing this. Once market start doing this, there's something going on. Alright. Once market start retracing, breaking structure, retracing, breaking structure, retrace, break structure, it means it is not ready to do what you want it to do. If it breaks up to 3 structure like that, just run. If you are in a downtrend and you are buying and it has broken up to 3 when it has not even gone anywhere, just run. Alright. If you are in an uptrend and you are selling and it has broken up to that 3 structure, just run. Take your profit and go, whether it has gotten to your profit or not. Keep your profits because what structure is doing is different from what you want the market to do. Alright. So you can see that this rising wedge It's actually one of my when I was trading gold that time. That it was literally she was actually doing this analysis and showing me, and I was actually considering some of them in my analysis because as I'm teaching, she's following, and of course I'm the one that taught it, so I must have to consider, right? So let me go to the next question. For example, in an uptrend by Said FX, if I'm in an uptrend, the price failed to break the high and create engineered liquidity. What if the engineered liquidity was already at the demand zone? Leave with that. Sorry, Said, I don't understand your question. You can um maybe you can rephrase that. Okay, Plutus. My question is: imagine market breakthrough or more bearish BOS, and the market begins to buy. It breaks out of the decision area zone. Do we start counting the buy BOS before the decision area or after the decision area? That breaking out of the decision area is a break of structure. Okay, so you should start counting it from there. But sometimes you can start counting it after the break. In fact, most times you can start counting it after the break. Alright, because if you want to add that decision zone breakout, it can the structure can now be up to even 4 or 5. But if you want to count it from the breaking out from decision zone, make sure that you are using a lower time frame to count it. Alright, to be clearer in lower time frame after breaking out from the decision zone. I mean the breakout. Okay, but if you want to add the decision zone breakout, the structure will now be 4 or 5 most times. So that still makes the after decision breaking out to be 3 or 4. Shiba Inu, how do you decide your TP once breakout and retest is? Okay, so yeah, that question I said I was going to answer it. Once breakout and retest is done, where is that breakout and retest? So this is how when I started trading breakout and retest, this is how I position for my TP. For example, like this rising wave now, I take the bottom of my what do you call it, support, so my resistance area, and then bring it out. I'm sure some of you know this. So after the breakout, I'll now measure it like this, and then that will be my TP area. That is how I trade patterns. Okay, for example, um, where's the support of that? So let's say this is our support, right? No, let's say this is our support. So this is one of the ways that I use to trade um, my targets. I don't know how to place this. How I'm going to place that support. Let me just look at another pattern so that I'm not waste time. Okay, let's say something like this now. All right. So break out from this. This is a symmetrical triangle. All right. This is a symmetrical triangle. So for my support now. All right. So what I'll do is that I take my bottom, my support. I just place my trend line. So my resistance. Then take it out to the breakout area, and that will be my target. That's how I take it. So you can see that. So my breakout area, that's how I target. You can see that after price targeted here, it started retracing. So Lex, how do you know the site to place it? I'm not saying that you must let it break out first before you know where you will now position your target. Okay, that is how I trade patterns. That's how I target pattern. Secondly, I always look at the nearest horizontal resistance in higher time frame. Okay, the nearest tough place, the tough zone in higher time frame or in the same time frame, then I place my TP there. And sometimes it doesn't even get there before it reverse. We have a class for target narrative, all right, where we are going to learn targeting. This is supposed to be part of target narrative, but I'm just answering it because I said I will answer a question. Can a weak breakout be considered a break of structure? Yes, it's a break of structure, but with time you will experience will teach you to differentiate between body close and weak. All right, both body close and weak, they are both break of structure, but technically body close is a higher probability than weak. All right, the reason why a lot of people feel like weak our body close, what price is going to do is going to do it, is because that week they will say is a body close in a lower time frame. All right, so for example now 4 hours can be a week while 30 minutes is a body close. So how do you decide that? So that's why that argument cannot be concluded forever. Okay, sorry, young boss. Wait, are you guys hearing me clearly? Why is young boss complaining that there are some interference with the audio? Can you guys hear me clear or is it breaking? Alright. So Obiadada in this decision making after price has given us theory on one motivate and one pullback to how do we know if it will continue selling or reverse? I have explained trend structure and structure change in our former class. Please, Obiadada, go and watch the recording. Um okay, so let's go to our, if you guys have any question, let me go to just raise your hand, I will unmute your mic. Okay, GUC wants to speak. Please, I don't need noise from your background, please. I'm begging you. Alright, GUC, please speak. I've allowed you to. I've unmuted your mic. Yes, I can hear you. Okay, the time stamp. How many questions do you have? Monday. Wait, you said Monday, 24th of February. In what time frame, please? Yeah, what happened to it? Okay, what time frame? That means in lower time frame, not 4 hours. This 24th of, oh, 24th of February. 24th of February, where is it? Okay, yeah. Yeah, 24th of February, yeah. Okay, yeah, 4 hours. Yeah, I get it now. So what's the problem? this one. Okay, okay, listen. The reason why I called that place, this place a weak high, this is where I said is the high, right? Yeah, right? So it is because this high is already a weak high. Why? Because twice failed to break this low. Look at this. This is the low, right? Look at our low now. This is where it stopped. Okay? Before price came to threaten this low, where is our high? Before price came to threaten this low, is this not the high? Good. So because price failed to take out this low, the high that we're considering as our weak high is here. Do you understand? Every other thing inside is just structured towards this place. I don't know if you understand what I'm saying. The high that could not break this low. Normally, okay. Now, the high that could not break this low is this high. Alright? Whatever is happening here is just internal structures. Alright? Now, if I will show you something now. If we go to a 30 minutes time frame now, you will see three or more breaks here before this break happened, which is normal because normally after the third or more break, we can take out the following low as our inducement before we continue. Okay. Now what I'm saying is that this is the low, the internal low before, I mean the last low before we came towards this high here. This is the high that I'm looking at. I'm not looking at what is happening here. If I'm going to buy from here, listen, if I'm going to buy from anywhere here, anywhere around here, I'm going to be targeting this high, this one. You know why I'm going to be targeting this one? Because that's the last high before we threaten this low. Abi, are you not seeing it? Let's not look as if I'm the only one that is seeing it. Look at it. This is our last high before we came to threaten this low. Two of us. So it is the failure to break this low that is making me to target this high. Did I answer your question, please? So if okay, all right. Please ask your next question, please. Yeah, yeah. You will still consider the same zone. Look at what you're asking. For example, we have something like this. We break a first one, then second one, then third one, then maybe something now form like this and it not break, right? It did not break the fourth one. We should we now consider it as the second supply? No. It is the structure that it is the high before this second break that you will consider. All right, because that is where that's the last high before the second break. Okay, so whether there's a weak high or there's a weak low, this is where you're considering. Do you understand? Why? Because this low was not broken. Okay, now if this low was broken, then we would have shifted our attention to this place. It is it is all right. Mhm. then then I can boldly I if I'm seeing two breaks, my trend, if I'm seeing two breaks, I'm taking the next one following break. I'm taking the following POI. Maybe there will be engineer liquidity there or inducement. I will take it for the third break. I'm not saying that you guys should not trade for the third break or the second break. I'm just saying that once it has broken three or more, calm down. You understand? I'm not saying that you should not take trade to break. I'm not listen, listen. This is what I'm saying. For example, we've broken one, right? Let's say we broke this one. You can take the next to protect this low. You can take the next available entry, break the second one. You can take the next available entry, break the third one. Okay? Follow the market to break whatever it wants to break. But once it has broken the third one or more, maybe you met it like this now. Maybe you open your chart, you met it like this. Don't even bother. Just relax. Okay? But in a situation where you've not seen, I mean, it has not broken up to three, you can take your entry to break the second one, the third one. That is that is even the cheapest way to even follow the market. It's so cheap, especially with gold. Just like this sell that I showed you guys that happened before the 4 hours, 5 hours, whatever. For example, now in this kind of situation now, the market broke there and then broke this, whereas it's approaching a higher time frame POI, but is forming structure. You have seen that okay, it broke this first one, broke this second one. Yes, you can take your entry and break the third one. Doesn't matter. But once the third one is broken, relax. That's my point. Do you understand? So what are you seeing here? Are you not seeing that? Are you not seeing that after this third break, market used here as liquidity? Did it even react? It never react. It is now this second POI that market engineer liquidity to continue from. This is what happened on Friday here. It's not like this one maybe 2022 price action. Do you have another question? I will not I won't take it. I will leave it because that is the rule of my trading. There must be a draw of liquidity or engineer liquidity, whatever it is, so far there's liquidity before my entry or after my entry is taken market now, I won't take it. 20th 20th August. Is it last year? Is it last year? Which time frame did I use? Is it 4 hours or which time frame? Okay, 1 hour. All right, 1 hour, 1 hour. Oh, let me go there. Mm, 20th August. We're almost there. Okay, yeah. 20th. Where is it? 20th. 20th. Oh, sorry. So this small one. This one here. This one here. I told you guys. I told you guys how I count my highs. It's because of the principle of how I count my highs. That's why. This one is not a high. Okay. I told you guys how I validate my break of structure or my break of low or break of high. There have to be an obvious liquidity or inducement or whatever. So that's why I don't really count here. This play is just like a retracement and then and even if you count it, it still follows the structure because I said after three or more breaks, don't follow the market to do anything. Relax. Alright. So whether it is 4 or 5, the major thing is that once you have seen more than three breaks, three or more breaks, calm down. Don't follow the crowd to do anything. Okay, that's one of the cheapest way to avoid stop losses or unnecessary stop loss. Just wait for the market. Market will give you another opportunity. On which side? The same place. Yes, yes, yeah, yes. This is this is this is where this is our second demand, right? This is our break, and then the second demand. So I said, like the instruction that I gave you, after the second demand is taken out. So this is where price, since the second demand and the first demand are almost in the same zone, this is where after price takes this out, you sell more. Now you can see what happened here. After price took out this second demand, hmm, what happened? Price started counting structures. Now, this is what I'm saying. That when price is selling like this, and it starts, it has not done anything, it's just breaking structure. Once it has broken up to that three structure, just run. Whether maybe you are targeting this low, maybe you are targeting all this place. Yes, we know that where you are, where price is going to, we know where price is going to. But follow the structure, what structure is narrating to you, follow it. Yeah, price broke, price broke. All this breaking, something is going on. You understand? If price really want to go straight down, it will not be forming this range that hasn't even gotten anywhere. Do you understand? So after this, whatever just close, you can see that market even came to take out your stop loss and did more. All right. Do you have another question? Yeah, exactly. The following break is number one. Yes. Yes, this is where I would have said, okay, wait for price here. All right. This is where this is where this is where price would have protected. Okay, price would have protected this low. Price would have protected this low. You can see that the first low that price protected was here. Okay, look at it. Do you see that? So it is okay for price to protect the first low. I mean to take out the first low. It is not okay for price to raid the second one, which is supposed to hold price. You understand? So failure for price to do that, something is going on. Another question. Yeah. October, is it October or August? Which one? October. Which month? August or October? October. Okay, go on. Mhm. Until the high of that trend is broken. Okay. Let's say, for example, now, let's say this is our decision zone now. Okay, let's say now not trend now. This after the third one, and the market takes this out, use the second demand, right? Until this high is taken, there's no new trend. Okay, so if market is now doing something like this, right? Is that what you're asking? Huh? The market is now doing something like this. After my third break, I'm leaving the trend. I'm leaving the trend. Gold have done something like this before. All right. So when after the third break, a retracement can come in, the price will now come all the way down again, and before it will now go all the way up. But I'm always cautious of. Let me show you something. All the trade I've taken on gold, everything is in my head. So definitely I will see something to show you concerning that after the third break, right? Okay. Here I made mention of something like after the third break, something like that. Where is that listing set? No, I cannot remember it myself. Okay, I think it's a 15 minutes. Is it 15 minutes? I'll be 5 minutes. Imagine that market bought here. I didn't really buy here, sha, but it's after this rubbish that I bought. So let me look for another example that I actually bought and I exited. I think it's a 15 minute that I will see it. Because 30 minutes will not really show us the skeletal view. If market really wants to buy, it will not range like that. If it's going to range like that, to be breaking small structure, and it means that the retracement is coming either to take out that demand or to come back to retest that demand. That is why I barely use break even when I'm trading. If I'm using break even, it's because I want to take another position above my entry. I want to take another position above my entry. Not because market have moved and I just place break even. No, I don't do that. So I won't pass where I want to. Let's say for example now, something like this now. Something like this after market, and let's say something like this now. The market, we are in an uptrend, market tapped into this entry. Okay, so whatever is happening here, markets have broken. Market is not even bearish yet because this low have not even been taken. So we are fully bullish, totally bullish. All right. Now, if I said I want to count my structures from here, one, two, and then three, and then four, and then this is an internal structure. Okay, one, two, three. It's 5 minutes that will really present the structure well. But I cannot go to 5 minutes. So let's say one, two, and then three. This is an internal structure now. Nothing has changed here. There's no bearish, there's no bullish. Everything is internal structures. Okay, but I'm still conscious of my internal structure breaks. Okay, I'm still conscious of my internal structure breaks such that whatever is in my second demand from my, whatever is in my second trend before the second break. So from here to this low is my demand. I can find other block inside. I can find fair value gap inside to refine it. But this full trend is my demand to this low. Look at it, to this low. Now, if price takes out this my second demand in this internal structure, it means that something is wrong. The bullish trend have been altered. Okay? So I can now expect that this low will be taken. Alright, this low will be taken because my second demand inside the structure have been taken out. So the low that started the structure range, are you getting what I'm saying? The low that started the structure range will be cleared. It will be cleared once the second demand is taken. It will be cleared. It's the same thing that happened here. Let me show you this so that you understand better. This what happened here is the same thing that happened here. Where is it safe? Yeah, it's the same thing that happened here when everybody was bearish. I was not seeing the. This is a fully bullish trend. When market just sell, you guys just feel like, wow, market has really good. Alright. I told you that in bullish trend, market protects lows. You don't care where the trend is coming from, as long as the low is being protected. Now look at what happened. What happened? Market broke structure, broke this, right? Market now protected here with engineer liquidity, which is normal because we are in an uptrend. Market protecting this low, market protecting this low, this will help you understand better. Market protecting this low is okay. There's nothing wrong with that. But you must be conscious of your lower time frame structure so that the low that protected, the last low that could not break this low, you have to put it into consideration, which is here. Now, the structure that it's formed, where is our low before the structure started forming? The internal structure started from here, abi? There. Now, we have a fair value gap. Okay, we started breaking structure 1, 2, and then 3. Okay, which is okay. Now, like I told you, after the third break, we should consider the second demand. Where's our second demand? Here now. The last low after the second break, right? Which is here. Now, this is what I did. Both in my personal account or in all my accounts, I placed buy, setting my SL below here. That is what I did. So every retracement, blah blah. If we take out this low, the second demand inside the structure, we are coming to take here out. Take note, this is where I said we are taking out. I'm not saying that we are coming to take here. The protected low. I'm not saying we are coming to take here. I'm saying that we are coming to take this low that started this range. Do you understand? The low that started this ranging is where we are coming to take out. So I placed my SL below here, the second demand. So I'm expecting that okay, price is going to is worst case scenario. This is where my SL will be. I will not place SL here because once here is gone, everything here will be gone. The second demand inside the structure. Do you understand what I'm saying? So if market is breaking 3 or more, whatever, I can exit my trade. I exited my buy here to wait here. Market want to keep going, no wahala. You will give me another opportunity. But me waiting here is that this is the lifeline to save the trend. The market want to continue going up. Do you have any other question, please? Engineer liquidity. I will teach you guys engineer liquidity. This is engineer liquidity. The reason why I took here is because market actually took out liquidity with this demand. Look at it. So you took out this liquidity with this demand. Alright, so this demand, this whole thing is a demand here. Alright, so market came, engineer liquidity, and then I clicked my buy. So I exited here waiting for second demand of the structure for continuation. Any other question? I hope this is the last question so that another person can speak. Why is somebody complaining? Are you guys hearing me and seeing my Chris FX? Is your network that is bad? Refresh your network and join again. Don't say that my network is not helping today. Continue. Okay, no problem. That question will save it for when I'm teaching you guys like how to run top-down analysis and how to reduce your time frame as per the kind of trader you want to be. We'll talk about that. So keep the question for when that time comes, because if I start answering your question now, we'll start saying introducing a lot of things like time frames and then the kind of trader you want to be and stuff like that. No, you've asked enough. Let others ask because it's already 15 minutes into this class. But but I answered the questions you asked. Do anybody any other okay. Any other person wants to ask questions, please? Just okay. AMD. This is the first guy that I've actually paid for this mentorship. AMD, please unmute your mic and speak. I've unmuted you. AMD. He was raising his hand. Why is he not now? Mr. AMD, unmute your mic and speak, please. Okay, no questions. Okay, sorry. So, any other person want to speak, please? Any other person want to ask question? Just indicate. Okay, nobody want to ask question. Fine. So that means filmmaking. Okay, Objadada, in this decision making, after price have given us three or more BOS with downside, for example, and pull back to mitigate PO, how do we know if we should continue selling or reverse? After your second, okay, I've told you before that you should go and watch the class. Alright, alright. Please go and watch the last class. You will understand. After Timothy allowed to speak. Alright, Timothy, unmute and speak, please. Ask your question. Is Timothy alright? Please ask your question. Yes, I can hear you. I said it like that because it's EU that I used EU to learn structure. But when I brought it to gold, it's the same thing. Alright. A lot of people complain that gold doesn't follow structure. Whereas gold follows structures a lot. To make this easy for you, use EU to study structure. If you bring it to gold, you will still be able to do something. Did that answer your question? And trading one pair is not an achievement. See, I did not just wake up in the morning and decided to be trading one pair. Please, I think you guys are making this mistake. I did not. I traded EU. I've traded EU, GU, NZD, USD, GBP, JPY, GBAUD, everything. All right. I've traded those pairs for a few months. I mean, not everything at once, but I've traded currencies for quite some months when I came back to Forex. And then it is from my trading then that I was able to decide, okay, I don't trade this anymore. I don't want to trade this one anymore. I don't trade it. Before it now reduced to EU, GU, and gold. Then EU, GU started making things difficult for what gold is doing for me. Like gold is the one that rescues my account. So what I'm saying is that when you cannot just wake up in the morning and decide to trade one pair. You have to trade different pairs for 3 or more months. Then for every of those trades, record all your trades. Then you will know, okay, this particular pair, I'm not winning a lot with it. I'm always losing. Let me remove it. Okay, this pair is the one that is giving me more wins. Okay, let me keep it. That is how you decide whether to trade 2, 3, 4, 5 pairs or not. Alright, you can't just decide that you want to be trading one pair. You have to trade different pairs, bring the data together, reflect in the trade history, check it, the one that have been making you win the most, concentrate on those ones. If it is only one, take that only one. If it is two. I'm still going to talk about this in the future. So I believe at least with that one, you've been able to understand something. Okay, let's go to the next person, please. Kenny. All right, Kenny, unmute your mic and speak, please. Kenny. Okay, Kenny is not ready. Let's go to the next person. 20 posts. 20 posts, unmute your mic and speak. Good evening. The market will still find a way to protect it because that the following demand is a liquidity, and after a liquidity is taken, market can reverse. Okay, is a low. That low is a liquidity. After a liquidity is taken, it doesn't need to come to the extreme of that second demand before it reacts. What I'm saying is that, for example, if you have a hand like something like this now, say market this second demand is completely mitigated, all right, by this one, by this following one. Okay, now market can react from just taking out this low and buy. Okay, mitigate. Okay. Okay, let's say market tapped into this entry. All right, let's say that's mitigation complete. Market coming back into a demand. Okay, let's say this is our second demand now, right? So this is our low, right? And you know that market can still come weak this second demand. All right, it has to weak it. It can weak it and then continue buying. It doesn't necessarily have to close it. It cannot close below it. It has to weak it. It can weak it then, but it should not close. All right, it should not. It should just weak like a draw of liquidity. Maybe because this one is already mitigated, so it needs more liquidity, which is fine. I think gold have done this before. All right, it can weak the second demand because let's say it has been mitigated. That's fine. Just weak it and then continue, but it must not close. Did that answer your question? It if it weaks, yes. If it comes and it weaks it, fine. If it doesn't, it must surely engineer liquidity. I'm going to teach you guys engineer liquidity later because in order for it to excuse, I mean, the excuse of not weakening here, since it has been completely the demand have been completely taken out, that there's no longer space again for price to come and mitigate anywhere or for price to come and take any order here. Every order have been cleared out. All right, like every order have been cleared out. Price will engineer liquidity. I will teach you guys engineer liquidity. If it doesn't want to weak it out, all right, it will engineer liquidity to protect the demand. So the whole point is for manipulation. Okay, some people, if as it has weak here now, some people will be selling, whereas to manipulate people to, you know. So that manipulation can be done by engineer liquidity. It's also it's all part of manipulation. All right. So in the situation where price have, do you have another question? All right. Okay. So any other person? Plutos. I mean, what do they? How do you pronounce your name? Oh, yeah, ask a question now. Unmute and ask a question, please. Uh, Uche now, Uche now, we will talk about top down, and this is when we start doing weekly breakdown, whatever. Okay. Yeah, Plutos, please talk. I'm listening. Plutos. Yes. See, if market is buying and it comes to the if market is buying and it comes to the second demand, I'm buying there because that's the trend. Okay, one thing, two things to consider. If market is buying and it comes to the second demand, I am buying. If it takes it out, that's the stop loss, minus 1 hour. If it takes out the second demand, then I sell to take out the whole structure. I mean to sell more. You understand? So there's no guessing there. That's a decision making. Whichever side that you face, just know that markets have not made decisions. So pray that the decision that market is going to make is to your own advantage. But since the market is bullish, I'm with the buys until market takes me out. Do you understand? Then my second consideration is if there is a higher time frame target. That's why there is a special class of target narrative. If there is a higher time frame target that market have not taken out yet, okay, that will give me more confidence to even buy from that second demand because I'll feel like okay, market is approaching that higher time frame target. Do you understand? But in a situation where market have taken out the higher time frame target, that's my second demand buy is a low probability for me because I will not be like, okay, where will market target? Where is market going to? You understand? But if there is already a place that market is going to in higher time frame, it's just cheap. It's a cheap trade, very cheap. Okay, ask your question. Or you've not put them together yet. Okay, so target narrative. Let's say what? Mm-hmm. If it is, I've already answered this question now. If it is, see, no matter the time frame, if it is two breaks, you can take the following trade to break the third one. All right. Well, I don't know how you guys trade, but if it's me, I'm definitely waiting for market to come there. All right, because if I'm trying to sell to my entry, I'm just like sharing my balance, like my money to the market because it is an uptrend. It's an uptrend. They can manipulate the sell and stuff like that. But once it's um the money that you want to make from that sell to your higher time frame, you can just wait and you can put all the risks together and just take the buy. You understand? So me, I will not take the sell to my higher time frame buy. Oh. I will not. I will just wait. That's why sometimes you see that when market is bearish, I barely trade. When market is bearish, I barely trade. I'm just waiting for my buy higher POI to come. So did that answer your question? Yeah. Okay. So you want to say something else? Pluto, you want to say something else? Okay, is there any other person that want to ask question? Okay, I'm not seeing any other hand. Okay, that brings us to Monday 18th, 2024 on gold. What time frame do you see? Monday 18. I'm not seeing 18 here. Monday 18th, 2024. Oh, 2024. Which month now? Do you see which month? Just say Monday 18th, 2024. November. Okay. What do we have there? November. Are you? I don't think you guys. This is recorded class, so are you guys sure that we are going to have this class sent to our recording group? So that is going to 2 hours. So November, Monday 18th. What happened to it? Do you see what about it? Why did you count the structure boss? It's a lower time frame trend, alright? I just use the internal structure breaks, which is here, to count it. Sorry, it not see the liquidity. No, it's engineered liquidity now. Here it's engineered liquidity. Or if I now go to 30 minutes now, will I be able to come all the way to that place? To be hard. So this is slow. It's engineered liquidity in lower time frame. That's why I counted it. Okay. If you go to a lower time frame like 15 minutes, you will see it. I'm talking to GUC now. Let's see whether I'll be able to do it. It's engineered liquidity. Let's go there so that I will show you engineered liquidity. And for those that don't have, for our new traders, don't worry. Engineered liquidity, all these liquidity talks, everything will be taught. Okay, everything will be taught. Please. In 15 minutes, it's even obvious in 15 minutes, and I'm using 30 minutes. Look at it. In 15 minutes, you will see the price tapped into the fair value gap first before when going up. All the fair value gap, everything will be taught, okay? So that you guys can understand us, we that are, for those that are new, you guys will understand. So this is a low and price. 15 minutes, you will see it. There was an engineered liquidity play before price broke the high, okay? Okay, so for the new people among us, do you guys have any question? For the new traders among us, don't you guys have questions? Noni, Noni. Sorry, I don't know how to pronounce it. Don't worry, the recording will be smooth. GUC. We are not on structure next week. Oh. We are talking about fair value gap and inversion fair value gap next week. But the learning never stops. So if you guys have any question, we'll still have a question session like this to ask questions for everything that I've taught so far. So you guys can still ask your questions. Pluto's, don't worry, there are some things that experience can teach, okay? But let me just, for example, now if price breaks a demand in the second demand, so you can go to a lower time frame that if you want to look for entry to continue, that's to now face the direction that price have broken to. Maybe we are in a downtrend, price now broke the second supply, and then you now want to be buying. You can go to a lower time frame now and look for entry from your order block or your favor gap or your breaker or your mitigation block, anyone. All right. Provided the trend has changed, you will surely see entry. Okay. Provided the trend have changed, you will surely see entry. Okay. You see, so you guys want us to still be talking about structure. See, there are some things that experience can teach you. It's only experience that can teach you. You understand? You guys should not make the newbies to feel like they are not here. You have a point, principles. If we get structure essentially half of the year. So, no other questions. I would like to. Yes, everything can be taught now. Finn, you want to ask a question? Okay. Finn, please, let's have Finn ask the last question. Good evening. You want me to mark out a structure in 4 hours time frame? I'm sorry, I'm really trying to understand your question, but I think your audio is breaking and it's causing me to not understand your question. Okay, ask your question again. I think because of your question, I have to find a way to teach time frames as soon as possible because it's it's time frame class that can answer this question. It's not just about marking your structure. Okay. First, your target narrative have to be considered. Time frame have to be considered. Okay. So I think I need to talk about time frames as soon as I can before we because if I'm talking about time frame now, just like target narrative is going to answer most some of your questions or some of you guys' questions. Time frame is also going to answer you guys' question too because you guys need to know your time frames to be using as whichever trader you want to be. So I think I'm going to dedicate a class for that because I'm not supposed to teach it now, but it's looking like time frame is one of the biggest challenge for most of you. So so that you will know that if you are using maybe 5 minute time frame, you should not be looking at 4 hours structure and be thinking that okay, once you get to a particular point, that should you should take your profit and get out of the trend because you are using 5 minutes. So you cannot be using 5 minutes and be using 1 day time frame to be setting targets. So those are some of the things that we will talk about during the time frame class. Don't worry, I will try as much as possible to bring that time frame class closer so that you guys can understand something before we continue. So don't worry, we still have a lot to learn, guys. You guys should. I just don't want the newbies among us are. If I expected the newbies among us to ask questions more tonight, because they are the ones that are hearing these things for the first time, like the structure and but they are hiding. Okay, that's all for tonight. I will send the recorded session tomorrow, please.